Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Monday. It is 15th. It is, I guess, Amazon Prime Day. So happy Amazon Prime Day to everybody. Hope you all had a great day, both in and out of the market. Pretty boring, lackluster day. For the most part, not a lot of movement throughout the course of the broad market here today. Many of the sectors very unchanged here as well. And good afternoon, Patricia. Hello there, Adib. Great to see you guys. As always, hey, Fortino, good to see you, my friend. Hope you guys all had a fantastic weekend. It's nice. It took me all week last week to kind of reconfigure after having that weird half day on Wednesday and day off on Thursday. I woke up feeling normal today, and that was exciting. So, and yeah, you hit it right on the head, Fortino. Not going to complain about boring when it comes to our cash flow trades, especially as we're moving into earnings season. Of course, Citigroup getting us underway here today. An okay report. It didn't really light the world on fire, but certainly a little bit of an earnings beat. And hey there, Micah, and hi, Linda. Great to see you both as well. I hope you're doing well. A little bit of selling over in energy, and we kind of ran into that resistance late last week. Industrials kind of back and forth day, but really one of those days. We should get a little more movement, at least on individual stocks, as we move into the rest of the week. Pretty big names reporting earnings here tomorrow. You have JB Hunt reporting here tonight after market close. Smaller size S&P 500 company, but here tomorrow before the open, JP Morgan, Wells Fargo, Goldman Sachs, Charles Schwab, of course, Johnson and Johnson. So certainly some pretty big names reporting earnings, and that'll remind you it's earnings season. So as always, do be sure to be checking those earnings calendars. Make sure you have a game plan for how you're going to handle all these upcoming earnings. Everybody will do it a little different, but ultimately I just want it to always be our plan. You don't want to wake up wondering what just happened. I missed the earnings announcement. That is no fun. And good afternoon, Emily. Great to see you as always. So certainly not really a big newsy day either. You did see Symatech drop after the kind of rumored buyouts. If you remember a couple of weeks ago, Broadcom was in talk with buying them out, merging. I guess that deal went through, kind of fell through, and they were down big here today. But I mean, it was really one of those days. You had a pop right on the open, and immediately that was the end of the road. We sold off right on the open and just flatlined pretty much all day long. And that is just the kind of day that it was as the week kicks off here. Doesn't give us a lot to really say interesting about where we are in the market. I mean, it's basically it's Friday all over again. It did hit a new high here. Didn't close at the new high, I guess, if we want to be picky, but we did hit a new high in the S&P. And hey, Lauren, good to see you. I hope you had a great weekend. So more of the same, still above everything. We can kind of start looking to this low that we put in here early last week as a little bit of support. Of course, we can also look to the old resistance to be that first level of support for us. So everything is still, on the up and up as far as I'm concerned. Broadly speaking, same story over in the Dow. Nothing really too exciting, just a big nothing burger, nothing sandwich, whatever you want to call it. Any pullbacks that we see, keep an eye on that 9 EMA. That certainly can act as a support catalyst. If we do get a little bit of a pullback for new trades, wouldn't complain. For existing trades, I'm all right with it, giving it a little more of a run if it really wants to. So over in the NASDAQ, probably the best looking close here today. Very similar candle, come off the intraday low, didn't really get any movement going early, just flatlined throughout the course of the day, but all-time highs, hitting all-time highs in the Dow, in the NASDAQ, in the S&P. I guess you can be bearish, broadly speaking, but I don't understand why you would be. I'll go with the flow. Wouldn't maybe hurt a little consolidation or pullback for new trade opportunities, but right now looks like bulls are still firmly in control, even on a boring do nothing type of day. And good afternoon there, Jimbo. Great to see you, buddy. Hope all is well. Hope it was a good weekend. It was a summer weekend. It feels like summer now. I'm ready for it to cool off already. So, but I don't think it's going to cool off yet. Over in the rut, just continuing to hang around back and forth at that resistance. Again, for me, nothing has really changed. As Fortino pointed out, this is exactly what we want. Nice, boring movement for cash flow, and nothing really says cash flow to me, at least index-wise, quite like the rut. I'm sure most of you guys are in the same spot. So continue to use that same level of resistance. We've actually developed into a pretty tight little intraday or short-term trading range. If we kind of scrunch it down, just kind of back and forth, back and forth. Ultimately, if we break out of these highs that we've established or the lows that we've established, probably should expect maybe a little bit of price movement that direction. Not really enough to change your opinion or anything along those lines. Same old boring numbers as always. Approximately 16 at resistance, certainly the one to be keeping an eye on, and then anywhere from 15 to 1450, depending on how you want to call support. Either of those would make a lot of sense. Certainly our swing would be eye on over in the rut as well. That's we definitely like boring when it comes to the rut. It really kind of our sectors. Only energy was really kind of moving today to the bearish side, kind of getting smacked at resistance, it looked like. So, oh, nice. Yeah, I imagine Cali's beaches are a little different than Florida's, but they're beaches. You got that going for you, Jimbo. So can't be too terrible, I imagine. Over in materials, just hanging, again, a little bit of creeping to the upside. Same general patterns on pretty much all of our charts. Did try to breach, and I guess aggressively speaking, you could argue that Lynn did break out. I wouldn't make that argument. At the very least, I think we have to take out what turned into today's high if we're looking at a breakout on something like that. Personally, still knocking on the door on APD. So I continue to be cautiously optimistic. I really am happy that we've reclaimed that 58, a little bit of an upward swing. Don't have a lot in our way until we get to that 59.20 area on the chart. Not a ton of big earnings in this space in the very short term. So still kind of waiting for some breaks personally in the materials. Exactly, Jimbo, in the material sector. Energy was the only real interesting area today. That sector-wise, pretty darn bearish as we really got smacked at that resistance level. Don't know that that's enough for us to say much of anything. We did have XEC though from, I want to say the stock report, but maybe the options report break that little support level again, depending on you. Maybe it's already broken down. Maybe it needs a little bit of confirmation. So that was interesting to see that movement. It'll be interesting if this sector continues to sell, if we see some of the stocks within energy that look a little more like XEC than, maybe I don't know, XOM. It'll be interesting to see how they fare. Right now, again, just like it's been a while, I don't think energy is telling us one way or another what it wants to do. So I'm going to let it continue to play out. Did lose today at resistance. There is no doubt. Holding on that 9 EMA though. So a little bit of a battle ensuing here over in energy. Financials, we did have Citigroup pop a little bit on earnings. Didn't hold that. It was an okay report in my opinion. Nothing earth-shattering or fantastic, but certainly not a swing and a miss either. Again, you kind of saw the list, and that's just for tomorrow. It's a big week for financial earnings. Pretty much, let's just let this week go by, is my opinion, and then we'll start making some decisions over in the financial sector. That's how I'm looking at it. If we are looking at some continuation, probably need to take out what's turned into this little 2-day high. It's not a major level of resistance, but we now have a little bit of reason to believe that for whatever reason that might be something to keep an eye on. So pushing past that would be a little bit of a bullish signal in my mind, but I'd like to see us get through at least some of these big earnings before making too much of a conclusion one way or the other over in financials. 29 still the major level of resistance in my mind over on the financial ETF. Same type of a pattern, but maybe a little more clearly defined on XLI. Let's try the 2 hours. Maybe this will, again, you can kind of see Friday's and today's high lining up very nicely with one another, which could open the door for a potential bullish signal if we break through them for a little bit of continuation into that $80 range. it's slower and it's a little harder to trust maybe than something like tech right now for some traders, but we did hold support. We did break some resistance. We are making higher highs and higher lows. So overall, I continue to be satisfied from a bullish point of view on the industrials. I do believe, if nothing else, we have a really good idea that this support that we've now tested twice at around 76 and a quarter is pretty darn important when it comes to this sector in the short term. So while we're not anywhere close to it today, something I'll be keeping an eye on if we do retrace back that far, but really not a great reason to think that has to happen at this point in time in my mind. Over in tech, just another day of tech doing kind of what it does right now. Just continues to be strong. NASDAQ looking great. Just continues to be a little bit more of the same. Our biggest complaint, it is definitely a first world problem, is we're starting to fly a little bit further away from those short-term averages. Maybe that makes us want to pull back, right? And that's okay to want that. There is nothing at all wrong with that. But overall, still looking pretty strong over in tech. Did have Cisco close above resistance here again today. So yet another bullish signal potentially. Every day above that resistance is one more day for the bulls to say, yeah, I trust that we're going to stay above this breakout point now, right? So every day above that, I think, is a positive day. Tech earnings, there will be some later in the week, but most will kind of start hitting us next week primarily. So that will be an interesting one to see how these tech companies hold up through earnings. But again, it's a boring day. I wish I could give you some great insight into most of these things, but today it is really just a little bit more of the same. Staples continuing to do what staples have been doing, pushing past resistance into some highs. Just continues to be a strong area regardless of whether the market finds itself in a risk on or a risk off environment. Really almost all year long, it's been, let's buy some staples, and that just continues to be a strong area. No reason to stop believing in it today, at least in my opinion. Threw it up on Twitter, but I thought it was worth taking a peek at. Got Hershey's, and this is the beauty of earnings season, running right into some resistance here today. Little bit of a cup and handle here on it. If we kind of squish into maybe a little shorter time period, can kind of see that a little bit of cup, little bit of handle, looking at it on a 4-hour chart. Now we do have earnings in 10 days, so something we're going to have to consider. If I'm looking at something, really whatever it is, it just happens to be this Hershey breakout candidate ahead of earnings, just have to be careful, right? We know their earnings are in 10 days. I know for me at least, I don't want to be there when and if they happen. So probably needs to happen this first half of this week, or it's probably going to have to happen without me, whether it's Hershey or whoever else it might be. This is the beauty of earnings season. I really love this pattern. I really do. But then I look at 10 days to earnings and like, that is keeping it close. Probably almost has to be a little bit of a day trade off of that breakout in my mind with how close we are to that. You can go, Jimbo, to your question, you can go based off of pay. A lot of times I kind of go off of just kind of how it feels. I always think about, if it pulls back to that 9 or whatever short term, I use the 9 and even the 20 or that swing support level, that isn't bad. That just means whatever, right? And so if we're rising above the 9 and I'm not willing to have a stop loss all the way below the 9, that's how primarily I'm going to gauge it as well. I wouldn't want to have to sit through that deep of a pullback into those short-term averages to be fair to the stock if it did pull back. So it's feeling a little bit extended. That's usually my general philosophy. Once I couldn't justify from a risk to reward or a comfort level perspective, setting a stop or an exit down below whichever of those short-term averages I was using in that particular case, that's where I'm really going to start to call it extended personally. So that's the way I gauge it primarily, Jimbo. And good afternoon, Scott. Great to see you, sir. As always, hope all is well. Hope you had a great weekend. Over in utilities, we're just hanging. We're just hanging at that resistance level until we break. You guys know where I stand on utilities. I'm not going to argue against anybody who is playing bullish in utilities right now by any stretch, but I'm waiting for that break as that next signal just to make sure we do not get stuck in a sideways action here. So could open the door for some nice breaks, especially having hung around here for over a week now. Little bit of consolidation up top before breaking out, say maybe next week. that would be okay in my estimation. Support at $59, 50-day moving average still. As long as we're holding this little breakout, I'm going to continue to stay bullish. I just don't think at resistance is a great entry price in the very short term. A little bit of a bounce back over in healthcare here today. Again, I do believe we kind of have to look at it with a little more volatility right now on the day-to-day price action. I did find, see if I get the ticker symbol right, not somebody I normally follow. I'm up on the tackle trading. Hey, I got it right. On the tackle trading Twitter, a little pharmaceutical company, mid-cap size company, a little bit of a pullback. You can kind of see very consistent intraday downward price action now working into these averages. Still probably need some upward movement before we can actually start talking, but I thought that was kind of an interesting development. It really kind of simmered down a little bit here today, as you saw by kind of looking at the daily candlestick. But even looking at today's candlestick, when we compare it to the S&P and pretty much everything else, a little wider movement, right? A little higher on the upside, a little lower on the downside. So more of the same. Expect a little bit of volatility. The pharmaceuticals their charts have kind of got beat up a little bit, and they're pretty sensitive. And maybe it's over. Maybe it was just going to be one of those weeks for healthcare. But I do think we continue to maintain with caution. Of course, Johnson and Johnson tomorrow. We also have UNH. I want to say Wednesday, but it might be Thursday. Plans continuing to hold up pretty nicely. Yeah, just a few days until earnings. So some big name companies within this space reporting earnings as well. On the resistance side of things, I'm just going to watch this top up here, and it's almost to the point, and it depends on how long it takes. But as of this moment, I think we almost have to break that resistance before we can say I'm comfortably bullish and I'm not worried about the volatility in healthcare. For me, as of right now, that is how I'm kind of looking at it. Open to both sides, bull, bear. Just want every time I'm doing a trade in healthcare right now, my philosophy is it's a little more volatile than normal. And maybe I'm wrong, but that's how I'll prepare, I guess, is the way I would put that. Over in the discretionary, just another day in the discretionary, starting to fly away from home. So you can kind of see, Jimbo, I mean, we haven't even tested the 9 EMA since we broke out. So any pullback, if we were to see this, none of us probably like it all to happen in one day. I know I certainly don't. But if this were to pull back all the way into the 9, technically, that's nothing. That is nothing at all. But price wise, that's way down here at 122.40. It's $2 worth of price movement. Would I want to sit through that? Well, that's kind of how I like to gauge. Kind of back to your question there. Things continue to look very strong over here. I mean, it just who's who of what do you like? Home Depot pushing up a little bit more here today off after breaking out. McDonald's kind of consolidating a little bit, but another solid day, just a hair below an all-time high. You've got Nike knocking on the door of some pretty significant overhead resistance. Yet Booking, they're a little lightly traded, and as an expensive stock, in my opinion, their options aren't particularly friendly to trade. So I usually don't really look at them from a trading point of view. They're just a bigger size company within this ETF. But an interesting little pullback developing over in Booking right now. I don't think we can say it's there yet, but interesting little kind of floor being built. Starbucks. So I mean, it really is just more and more of the same. I think I brought it up on Friday, but Ford smacking right into that old resistance level. Tried to stick its nose out on the intraday, and so oftentimes, which is why my rule is you got to close above resistance. So often it intraday turns around before the end of the day, but still knocking on the door of a break. But again, 9 days till earnings, almost had to close above resistance for me today for it to be something to look at. So just more strength. Again, this is one of the stronger, if not the strongest area in the market right now. You could make a case it's a little extended, broadly speaking, and you need to pull back, and I think that's fair, but I wouldn't confuse that with being bearish by any means. Although we did see, of course, we looked at on Friday, we made it to the stock report, really breaking down here. This was a big breakdown. This is my favorite type of pattern, as you guys all know. long term, I mean, this, we're going back, you know, but I'm not afraid to go back in time a long ways. This was a major level of support, broke through it actually, of course, last week, more follow through here today. So certainly it's not all great, just mostly great right now over in the discretionary sector. Real estate trying to have a little pullback. We do have Prologis with earnings, one of the larger companies within this ETF. You know, again, not really a whole lot to see here. Maybe you'll need a little more upward movement if we're thinking about this from a pullback perspective. And there are going to be earnings. Most of these guys have earnings sooner rather than later. But you have things like American Tower that kind of had that bounce off the 50, ran into resistance, come back and make a higher low. If we could take out this resistance level or this last swing high, I would argue there's really nothing in our path until we get to those old highs, right? And whether it's AMT or anything else, that's the type of pattern of course, that mostly the pattern I'm speaking of there. So there are going to be some pullback opportunities. You're going to have to keep in mind though, just like everything else, you like the way something looks and then you look and you say, oh, there's earnings. And that's just the way that it goes for us directional traders during earnings season. So I think we need overall broadly a little more upward movement in the ETF. Started to get moving here today, coming off of those highs, not quite the confirmation that I would be looking to. And I'm not sure who you were looking at there, Jimbo, on ATR. So I'm sorry I missed your comment there. Until it was too late. So and let's see here. Lastly, over in communication services, not a lot. Still showing quite a bit of, actually sneak in here to the weekly chart. These guys, of course, as you guys know, not a particularly long history, not too far away from their personal high. So something that puts us at $52. We still have some room to run here. That's going to be an interesting thing to watch. Of course, we all know the drill. Facebook and Google, big players, kind of a bounce, you know, back and forth day over in Facebook. Similar, closing above averages above that 50 here. You also had EA, they're still hanging around support unless they broke, working right down into that support zone. You could easily argue it's a breakdown candidate if that support gives out. I'll argue it and I'll continue to watch it. And then if it breaks it, I'll say I can't trade EA, as you guys all know. So again, really pretty much unchanged. Still some interesting candidates from both a bullish and a bearish perspective out there in the market. Certainly feels a little more stock picker type of market. But then we add the layer of earnings, which naturally just eliminates a lot of candidates every given week. If you're like me and not willing to hold through earnings, we just have to deal, right? We can complain. You're welcome to come here and complain about earnings if you would like. I'll listen. I'll probably join. But that is just the price that we pay for, I guess, in my opinion, being responsible and not holding swing trades through earnings. Over in the VIX, nothing here. Very boring day in the market. So to no one's surprise, very boring day over in the VIX. Little bit of a bounce back candlestick here on the dollar after testing that 200-day moving average late last week. Need to see some upward movement. I maintain that this is just from a swing perspective. Let the intraday players have their fun. Some upward movement could make sense to look for some bullish things short term on the intraday, but I don't think it's here just yet. But we did kind of have that green inside candle. It's kind of in a mixed bag, right around that old trend line, which we could probably get rid of. We're hanging out at those moving averages. We've got a lot of overhead. So I'm just going to continue to say this is overall neutral because I think that is the best way, especially from a swing perspective, to be looking at it. Over in gold, a little more back and forth action here today to see a little bit of upward movement. But again, we're really starting to develop into a little bit of a sideways range, a nice area for cash flow traders, maybe for intraday traders as well. But for directional swing traders, I don't know what you're supposed to do. I think we let it kind of back and forth within this range, get a clearer signal. But again, higher highs, higher lows, a lot of positive momentum as long as it makes sense technically and within the systems. I wouldn't put up much of a fight. And 6, yeah, I confirm. My rule when it comes to breakouts is it has to break above or below, close above or below, and carry through the next day. Not 3 days from now, the next day. by 10% of an ATR above or below that high, depending on the nature of the break. If it breaks and it doesn't break it by 10% of an ATR that day, but say breaks it 2 days later, I will look to maybe redo the entry. But as far as kind of setting those breakout or breakdown trades up, got to be the close, got to be the follow through the next day. And again, maybe it's just the way my brain thinks, but I want people to look at a break and I want them to be excited about it. I can't wait to get into this thing, get those orders in. I'm getting first thing in it tomorrow morning. And if we don't see them doing that, showing that follow through, I wonder, well, what's up? What's wrong with this breakout? Why don't you like this one? And so that's kind of the way I think about it, at least. But for rules and definitions, I do use 10% of an ATR beyond the close of the candle. There can be certain other times where there might be like an old tail, that does happen. And depending on how far away that is, generally I'm not overly concerned if it was there short term, but if it's not that far away, I'm not opposed to clearing through that either, personally. So, but a good question. And I think honestly, more than what the rule is, I think it's imperative that we have them and we're consistent with them. What's one of the biggest issues I have seen in my days of both myself and working with people, it's come in 10% of an ATR above resistance on a Tuesday. That was too quick. Ford, great example today. I'm never doing that again. So next time we've been burned, so we're really conservative, and then it's a runner, and then we miss it altogether. Never doing that again. That inconsistency is really the big kicker, in my opinion. And so I don't really care what someone's rules are. I just love when they say that they have them and they can explain them to me, even if they're different than mine. I do believe consistency and position sizing are really the two skills that we need as traders. And then the better we are at chart reading, of course, the better that is, right? Over in silver, a little bit of a run up. I still don't know what you do with silver as long as we're below 1560. I still maintain that would be an interesting bullish breakout. That is about the only thing I'm looking at right now. I do believe that you're starting to at least be able to think if we do take out support down here, that could be interpreted as a sell signal. I'm not there yet, but I do think you could at least start to make that argument. I'm still calling this thing neutral. I know some people were open to buying off of 15, and I do in hindsight wish I was one of them, but I was not, as you guys know. I'm just going to continue to watch and let it develop within this range. But we have created some of the characteristics of an upward trend here. Did take out that trend line and we flew right through it. That was kind of the big red flag to me for a potential trade, at least in the shorter term. Of course, in hindsight, I guess maybe it didn't matter all that much, at least as of right now. But for me, still has to break out before I'm too terribly interested right now. Good solid price action though today. Very strong day, candle wise here on silver. Over in natural gas, all that work last week and a lot of selling here today. And I don't think we're quite there yet. We're going to look at 2 time frames here on natural gas. This, of course, is, as you guys know, last week rallying into that breakdown point. Doji candle hanging around. First time in a long time closing above that 9 EMA. No movement upward here today. Again, this is just one day. We still have some time left this week, right? So far, not so good. If this were our end candlestick and we were to break this low next week, I think that's a really good technical setup. So again, for me, not going to be there. Almost had to break to the upside to think anything from a bullish point of view right out of the gate. And I don't really think I would have been interested, but at least I would have thought about it. Without it doing that, now I'm kind of hoping hang right here, show some downward movement next week, and then maybe we can talk about a bearish retracement in natural gas or over on UNG, zooming into a shorter time frame. Kind of see that we've kind of established some characteristics of an upward trend, a little bit of a top that's formed, starting to show some weakness. Think we have to break this low before we can really start talking from a bearish perspective. That's going to be the low from, of course, last week. So not a whole lot to see here in the very short term, but if we hang around in this area and see some downward movement next week, is a really interesting bearish retracement on that weekly chart. We're just going to have to be patient. Maybe we'll get it, maybe we won't. And lastly, over in crude, a little bit of downward movement. We did test those intraday highs. Of course, as you can clearly see here, we did not win that fight at all. We lost pretty handedly. I don't really think that's telling us a whole lot here at this point in time. Maybe a pullback is in the end of development here. From a bullish point of view, right now, still think you have to break resistance. But if we can get a little bit of a pullback into some slowing momentum, create a high that's higher than our high back here at 56, maybe there is a pullback opportunity. If you find yourself on the bearish side of things, I don't really know how you are doing that, at least on the daily chart. Right now, intraday, yeah, there was some really good intraday downward action there. Even on the weekly chart, not a whole lot to see here. So right now, I think we're either waiting for a pullback or a break to the upside. If we find ourselves bearish, I think we're waiting for some clear signals, and I don't personally think that they're here at this point in time. Kind of like Mark and Gino, good place for a cash flow. Nice naked puts or credit spreads. At least if we don't have a bearish bias on it, of course, but not a whole lot of new development here. So, ladies and gentlemen, that is where we find ourselves. Some interesting things, but for the most part, I mean, it was just kind of a day. We're not even going to remember this one tomorrow, probably. It was kind of boring. But such is life. They can't all be exciting days, or that would probably drive us crazy. That's going to do it for the market recap today, guys. But as always, thank you so much for your time. Thank you for those of you who joined me live. Thank you to those of you who catch the recording a little later. It's a lot of fun to go through this process with you guys. Certainly more fun than doing it on my own. So I certainly appreciate you hanging out, talking stock with me. As always, if you are new around here, do be sure to subscribe to the channel, hit the notification bell, join us over on Instagram at Tackle Trading, on Twitter at Tackle Trading. You can, of course, find me at Frank Martin23. If you're looking for me over on Twitter as well. I'll be doing our onboarding webinar here this evening, meeting with any new team members that are joining us. So I'm looking forward to that. If that's you, certainly looking forward to it. Hope to see you out there. The rest of you guys, I'll see you same time and same channel here tomorrow afternoon. See if it's a little more movement. I expect probably, because I think that's just a good bet. Today was really dull. So it seems like it's almost a guarantee tomorrow will be a little more interesting. So. But we will find out together one way or another. So get out of here, guys. Thank you so much for your time. You guys have a fantastic Monday afternoon. I will see you all same time, same channel here tomorrow. Thanks, everybody. Bye now.